Today I want to talk about time of day and using time of day in your trade planning and some things. My biggest psychological mistake in Forex was the fear of missing out used to drive me to do stupid stuff. I mean, that's really the single biggest issue is, oh my goodness, I'm missing out. Now let me do something stupid. Instead of saying, oh, that didn't fall into my plan, next. What I'll tend to do is make 10 trade plans, maybe across 5 or 6 pairs for the course of the day. And if 3 of those come to fruition, great. And then hopefully, or even 1 out of 3 is a winner. I can be a monumental underachiever and still be profitable. Hey, that's cool. And guys, if you can make 40, 50 pips a day, you're going to do fine. That will put food on the table, I guarantee it, and more. So if you're watching 5 pairs and they're going 100 pips, basically you're going to make 10% of that. 10%. You can do it. I'm a big time of day person, meaning that I watch the clock more than most. So the Forex market, like all others, is a collection of people. If you don't know necessarily where something is going, guess what? There's a bazillion people somewhere else in the world that have no idea where something's going. There's a lot of times where I'll log into boot camp and I'll be like, guys, we could do this, we could do that, and then, what we'll do is we'll basically work out scenarios for if this, then that, or if this, then this. So I want you guys to never underestimate just common sense and psychology. It's effectively a late Asia, early London deal. That's where I do 99% of my trading. If I haven't made my daily bread by like Thursday, Wednesday, I start looking at New York, trying to make it up. And this logic, this whole buy low, sell high thing, can be applied to this. We've just effectively had a 4-day weekend here in the States, and I live on the West Coast. It's 1:22 in the morning for me right now. Asia open. Well, we got New York, right? Let's say New York takes you up. Guys, you'll see a trade set up like this probably 3 days a week that can make you 50 pips. So let's say you capture 50 pips 3 days a week. That's 150 pips a week, 600 pips a month just on this one TV little strategy. So this is New York proper. Now let's say that late New York, I'm talking from after lunchtime, effectively trades you back. Now this here is about 6 p.m. Eastern. What do you think Asian traders are doing it, right? So the previous day looks like this. Okay, and this was basically, and this was sort of New York here, kicking in. What do you think the Asia traders look at? This has got nothing to do with a 4-hour chart, a daily chart, nothing. If you're an Asia trader, what are you seeing here? Basically, you're looking at the previous day, and you're like, New York bought us the whole day. The financial capital of the world took us up. And those traders all kind of took profit on some things. Now we basically at a 50% of the New York rise. So in other words, said differently, if you were walking into the market and going to put on your first trade in Tokyo, would you short there? No. It's not a good place to short. If you're not going to short it, there's a pretty good chance they're going to buy it? Absolutely. Now, where could they think about shorting it? Maybe in the little fib zone of that drop, possibly, or a break of the support level and a pullback. But you've got to assume that that's going to hold. This is how you can get misled on a 15-minute, because the 15-minute has to make lower lows and lower highs to trade it back to support in the context of like the previous day's rise. So yes, it will be in a downtrend, but it's going to be a buy because it's at support at a market open. Guys, it boils down to nothing more than psychology. It boils down to nothing more than a guy walking to their desk, sitting down and saying, okay, which way is this going to go? And then going, oh, look, it's at support, and taking a shot on the buy side. If you got this sort of thing, right, they buy at Asia and you sort of cruise on up here, right? And then you've got sort of a little break here. And this now becomes midnight Eastern. So this would be 5 a.m. London. Now, what is a guy like me looking at there? Okay, so Asia is taking this thing up for 6 hours. Bear in mind that there's no fresh money coming into the market for another 3 hours. You're going to be looking for a continuation long, providing what? Remember that whole Newton thing. An object in motion tends to stay in motion, blah, 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 blah. So now I'm doing this. I'm saying, so I'm talking about this area specifically. So I'm asking myself a series of questions. I'm like, which way is Asian direction going? That's my first question. Second question, has it hit resistance or has it come down to support? Now, what would constitute support or resistance? An extreme pivot point. a longer-term Fibonacci level, a daily 5-year MA, whatever, okay, a major psychological level, a previous level of visual support and resistance. Let's say that Asian direction was down and we had not hit support. What's the next thing I'm looking for, please? You're right, I am looking for a short, but be a little more specific. Right, I'm looking for resistance. Right, now I'm going in search of resistance because that's where I want to short from. Asian direction's down, we haven't quite hit support. Now I'm like, oh, where's resistance? And say differently, if Asia was up, like this example, and I'm like, great, we've got resistance up here because it's a reversal pivot, it's a psychological level, it's a fib of the draft, etc., etc. You know, let's say Asia took this thing up and we have not hit resistance. So we've got like 40 pips here between us and resistance. Right, now I'll go looking for support. So I'm like, awesome. If it hits support before it hits that target, I'm going to long it. So now I'll go looking for support. Okay, now where is support? You know, it could be a previous visual level, it could be a hesitation, it could be a congestion zone, a little swing fib, a, you know, daily central pivot, a number of different things. The next question I'm saying to myself, I'm like, great, okay, cool. Asian direction was up. I know where support is. There's plenty of room to the next resistance zone. The next question is there enough quality in this trade for me to take it? Does the risk reward make sense? Okay, well, that's support. I'm going to have to give it about a 24 pip stop. I'm potentially going to make 60 pips. All right, my time of day entry, I'd better get this before the London Open, otherwise that could get really weird. Yeah, okay, the quality's there, providing that this happens towards 6:30 a.m. London. So that you're working out the feasibility of it. All right, I'm going to put you a potential of the trade, for lack of a better word. Now you can go trading, right? And now what? After this, you wait. You wait. And now it becomes a matter of, does the enemy enter into your sector or don't they? If they do, you knock it down. If they don't, step aside. It's that simple. So let me give you an example of this. What I'm looking for, if you've gone Asia up, I'm looking for a little bit of support to long it up for that continuation. And guys, you'll probably find that this trade here sets up 3 days out of 5 across a few pairs. And that's about a 50 pip trade, just trading a pre-London continuation of Asia. That's it. Okay, now, say you go into London Open and you're at resistance. How many people do you think want to long there? This trade here, that's available to you, like I said to you, 3-4 days out of 5 if you're smart. Honestly, I make quite a lot of money doing this. Nothing more than just this one little setup. And it's a time of day continuation play. That's all it is. Let me give you an example. You know, if there's been no Asian movement, you basically got to wait for a little breakout at that point. And if it's with the prevailing trend, even better. Here's one that didn't quite set up for us. So this here, I'm going to put a vertical line where my Asia Open is. And Asia is a bit of an enigma because Asia can be fantastic for a month, and then it's as if nobody trades Asia for 6 weeks. And then it'll just all of a sudden be brilliant again. And by the time you're like, oh my goodness, Asia's on fire, let me start trading Asia, it goes off the boil again. So you got to keep an eye on it. You got to be like, oh look, 3 active days in a row, okay, Asia's hot. Let me go trade Asia. And then as soon as it dies off, it's like, move to the next fishing spot. We looked at this animal and we said to ourselves, which way is Asia taking us down? We knew that there really isn't going to be any fresh money for another 3 hours. So originally when we saw this, we were like, okay, cool. Well, Asia's down, let's look for a short. Well, at that point, unfortunately, we were sort of all the way down here anyway. So we planned a short that looked like this. At this resistance zone, this wick low here, this range area, the fib, the swing fib of this drop, etc. We were like, okay, cool, we're going to take that down and we're going to target, I think we had 160.20 in mind, I want to say. Now, this trade didn't work out. As it is, we sort of double bottomed and jogged up. But that is the type of trade that I look for. Here was an example of one the other day. Asia direction down, right, look for resistance, pre-London, short. You know, this was sort of Asia direction. And then this was sort of a pre-London into London continuation. And a lot of it is just simply looking at that Asia direction and then, you know, here's one. Asia direction up, pre-London at support, continuation. My general rule of thumb is that if Asia is 60% of the trade, pre-London trade will be about 40% of it. And what I mean by that is if Asia takes you up 40 pips, pre-London is probably going to take you up around 27 or 28 for the continuation. The thing you got to remember though, Asia traded you short, so we were looking for something like this, pre-London, which we effectively got, and then we were looking for a long in London off the support. You can see where our alarm was there. Okay, and you'll see this a lot, guys. You know, Asia, pre-London, London. Something to be mentioned here, I characterize it more as sort of 4 a.m., 7 a.m. If you haven't got the pre-London continuation trade, if you're not all up in there by like 6:30 to 6:45 London time, it probably ain't going to happen, guys. You know, if you haven't been afforded an entry by then, it's not going to happen in all likelihood. And we'll see you guys tomorrow, okay? Take care. Pivots came about to assist floor traders in just giving them a reference point. They came up with a system which was nothing more than a series of reference points. Now, the basic pivot theory is above the central pivot, buy, and below it, sell. Above it, buy, below it, sell. Unfortunately, it's not quite that easy, but pretty freaking close. I actually developed a Forex robot that does it. It's a little bit of a wild child. I got to tame down, but it's profitable. Simply buying breaks of pivot points or selling them, right? But we'll call this our central pivot. This is the central pivot point. This is M1 to R2. Okay, M1 simply means midpoint between R1 and R2. Okay, and this would be M1 and S2. We're simply going to ignore the prevailing trend in anything. So the theory here is you break above the central pivot, you wait for a retest, you buy it, you take it up to the extremes. And when I say extreme pivots, I'm talking about between M4 and R2 or down to M1, S2. If you break down here, you know, break the central retest of that, and you trade it down to S2. And the pivot ratios are as follows. M2 to M4, write these down if you need be, or M3 to M1. Now these all slide up and down. So this is the same as S1 to R1, or central pivot to R2, or central pivot to S2. I base my daily pivots on 8 a.m. Tokyo time. To me, that is the start of the Forex day. Now, there's many interpretations to this. That's the one that I've always used. All right, now weekly pivots, it's different. Weekly pivots are simply the Monday open to the Friday close, or the Sunday evening open to the Friday close. That's on the basis to which they calculate it. Daily pivots, this comes up for debate, right? A lot of people on a Monday that trade solely pivots don't trade because some people include the Sunday bar and some people don't. The way I do my Monday pivots is, yes, I actually happen to include that Sunday bar. So it's Friday plus Sunday equals Monday's pivots for me. Tuesday, Wednesday, Thursday, Friday, they should be 100% consistent. I base mine, like I said, on 8 a.m. Tokyo. The cool thing here is that you can use these to determine extreme levels of support and resistance. So, in other words, if you open London in a reversal pivot zone, chances are you're going to trade that thing back to the central pivot. And if you open London or open New York at S2, chances are you're going to trade that thing back to the central pivot. Or if you open the market above your central, you're going to look for a retest for a buy. And if you open below it, you're going to look for a retest for a sell. And obviously I've really come down massively, but it's not coincidence to me that you open London at 105 and a weekly reversal pivot, and here we are. We're heading back to the central here. Then what do you think is going to happen? This particular plotter, and it's a little buggy. Sometimes when you open it, like it'll have all these weird lines. Just change the time frame, flick the time frame back and forth, and it'll sort of recalibrate itself. Every plotter you could imagine all in one. If you want an hourly pivot plotter, if you want to plot the pivots to the previous hourly candle, you can do it here. If you want the previous 4-hour candle, you can do it here. All you got to do is change whatever you want to true and anything else to pulse. So I got this set to daily, so I want it on true. So this plotter is everything, the one that link I just posted. And on the daily pivot, there's not even any offsets. It's going to take your computer clock and then calibrate it relative to the Asia Open, and off you go. Here's pivot theory in a nutshell. Above your central pivot, buy. Below it, sell. And you can even tell here, even in the rangy times, look at how price bounced off that central and above it and used it as support both times. You don't just reverse longer term charts like this. for something to reverse on a longer term, bearish, and then a neutral phase, and then bullish. Very, very, very seldom, almost never in my time trading have I seen anything do this. It almost never happens in a V-bottom deal like that. You know, what's the trade plan? The trade plan is to wait for things to roll over again on the 4 hour through this sort of area. You know, so yeah, it's pretty long here initially. We're probably doing a little bit of this action, you know, down here off this 5, jog out there towards 90 cents, top out there, and make our way all the way back down another 1,000 pips. Don't try and fade fundamental news like that. It's sort of verbal intervention. Market's going ballistic, guys. What are we going to do here? All you can do is wait at this point. Magnificent to look at, and that's 700 pips, and that's awesome and fantastic. But hey, it doesn't fall into our strategy, doesn't fall into our shooting zone, so we're going to wait for stuff that does. This was a major psychological epiphany for me.